And Ruth, of course, we continue to see the pressure on the Japanese yen given Governor Kuroda's stance when it comes to loose policy. But we're seeing now whether it is yen swaps, corporate bond coupons now pointing to perhaps a surge in the 10-year yield. What is this telling us about expectations of where the BOJ will go?
It is a clear messaging from bond vigilantes, isn't it? That, they are willing to test the BOJ's mettle here. In terms of, yen swaps climbing, absolutely. Average coupons on 10-year corporate bonds pushing higher. Swaps pricing in negative rates around the time, negative rates ending around the time Kuroda steps down in April. All of this is telling us that there's going to be ongoing yen pressure, ongoing pressure on JGB yields to push higher because investors are just not convinced that the BOJ can cling to its ultra-dovish monetary policy stance when inflation is pushing higher around the world and creeping into Japan. And as long as Treasury yields continue to edge higher, as long as the dollar continues to push ever higher, you're going to see that pressure continue to mount day by day.
How about pressure on the offshore yuan? We did see it hit a low that it hasn't reached since August 2010 yesterday. How much more downside is to come, and how are policymakers managing this decline in China?
Absolutely. It's another key currency that's under a lot of pressure. And again, it's that divergent story, isn't it? You've got the Fed hiking interest rates aggressively, and what's happening in China, the opposite's happening. At the same time, they've got a property downturn. They have got, ultra easy monetary policy. So as long as that divergence continues, you are going to see pressure on the offshore yuan. This is just another line in the sand at that 7.2747 mark that was reached overnight in the New York session. Traders will continue to try to short the currency and test China's mettle at defending it at some point if they wanted to.